All right, let's do business now in 55 minutes. This is Business Incorporated, and here's what we have prepared for you. In Egypt, it's not looking so good. Inflation has surged up 12.5% year on year from 11.7%. And Ghana has signed its 6th bilateral debt agreement with Germany. In Kenya, the Revenue Authority has increased its enforcement on importers and small businesses. That's for tax enforcement. Welcome to the program. I'm Ini John Mekwan. We start as usual from the oil space. Prices were stable today as oversupply concerns balance uncertainty over the impact of the latest U.S. sanctions on Russian oil. Investors continue to assess the fallout of the U.S. sanctions on Russia and their impact on both crude oil and refined fuel market. So Lukoil has declared force majeure at an Iraqi oil field that it operates on, and that marks the biggest fallout yet from the sanctions that was imposed last month. European diesel refining margins, they are around 21-month highs of close to $31 a barrel, and European gasoline profit margins are also their highest in 18 months of almost $13 per barrel. Earlier this month, OPEC Plus had agreed to increase December output targets by 137,000 barrels per day. So that all of this have led to these figures that we have here, an increase of about $1 from what we had in the morning for Brent. So in the morning it was about $63, and now we see Brent has gone up to $64.36 a barrel. WTI has also gone up. It was at $59 earlier today. Now it's $60.37 after it went up 0.4%. Moving away from oil to gold, metals generally. Gold prices rose further on Tuesday to hit their highest level in nearly 3 weeks, helped by growing expectations of another U.S. Federal Reserve interest rate cut that could happen in December, and also signs of an end to the U.S. government shutdown. So we see a spot gold is 0.5% or so higher at $4,144.90. U.S. gold is 0.4% in the green, $4,137.50 per ounce. Spot silver is much higher than that, 0.86%, up $50.74 per ounce. Platinum is 0.5%, up at $1,609.40. Palladium is also up more than 1%, and the price is $1,465. The U.S. Senate, we remember they passed the deal that would restore federal funding and end the longest government shutdown. Key economic indicators such as the non-farm payrolls report, they've been delayed because of that shutdown. A government reopening in the coming days will offer more clarity on the U.S. economic outlook and the Fed's interest rate path. And now let's go to Kenya, where the Revenue Authority has intensified tax compliance measures targeting importers and small businesses, aiming to widen the tax base and boost government revenue. According to KRA officials, the crackdown focuses on businesses that underdeclare imports or fail to remit the required taxes, as well as small enterprises operating outside the formal tax system. The authority has warned that non-compliant entities could face penalties, including fines and legal action. KRA's move comes amidst efforts to strengthen revenue collection to fund public services and infrastructure development, with officials emphasizing the importance of voluntary compliance and transparency. The authority has also announced plans to increase taxpayer education and deploy digital tools to make tax registration and filing more accessible for small businesses, reducing loopholes and promoting fair competition. Still in Kenya, the country has been ranked 4th in Africa for digital tourism, highlighting the country's growing adoption of technology to enhance travel experiences and promote its tourist destinations. According to the latest report, the ranking reflects Kenya's progress in leveraging digital platforms, mobile applications, and online services to improve accessibility, marketing, and customer engagement in the tourism sector. Tourism officials note that the digital push has helped attract more visitors, streamline booking and travel processes, and provide real-time information to tourists, boosting both domestic and international travels. The government has pledged to continue investing in digital infrastructure and technology-driven initiatives to maintain competitiveness and further strengthen Kenya's position as a leading tourist destination on the continent. Over to Ghana, where that country has signed a bilateral debt agreement with Germany, marking the sixth such agreement under the country's ongoing debt restructuring program. The Minister of Finance, Dr. Cassil Aforson, who signed the agreement on behalf of the government in Accra, described the pact as a significant milestone in Ghana's economic recovery journey. He adds that it will help to strengthen the foundations of fiscal stability and anchor long-term economic progress. Dr. Forson expressed appreciation to the government and the people of Germany for their continued partnership and confidence in Ghana's future, adding that the agreement reflects the strong cooperation between the two countries. And over to Egypt now, where inflation has gone up 12.5% year on year, up from the previous 11.7%. And this marks an increase of about 0.8% points, indicating a higher inflationary trend in the country. The Central Bank of Egypt reports that consumer prices surged due to rising food and energy costs, supply chain disruptions, and currency fluctuations. The increase is seen as a challenge to the government's effort to stabilize the economy while maintaining social support programs. This development may lead to increased volatility in the Egyptian stock market, particularly affecting consumer goods and financial sectors. As investors reassess inflation-related risks, and the market impact is likely to be short-term, as investors digest the implications for future monetary policy adjustments. And over in South Africa, official unemployment rate went down in the third quarter of 2025, signaling the modest improvements in the labor market. According to Statistics South Africa, the rate decreased as more individuals secured employment across sectors such as manufacturing, services, and agriculture. Analysts note that while the drop is a positive sign, challenges such as underemployment and youth unemployment remain significant. The government has attributed the improvement to ongoing economic reforms, investment incentives, and initiatives aimed at boosting job creation. Authorities continue to emphasize policies that support sustainable employment growth and address structural labor market issues. And with that, let's head to a conversation which is on a commodity that you may not easily guess. Guess what that is? Well, it's snails. Well, they've been considered as a delicacy, but is it by the elites or is it for regular or average Nigerians? I wonder, but they've been considered a delicacy and part of African elite cuisine. In some cases, it's been reputed to be an inducement factor in meals. The meat is high in protein, rich in iron, and contains almost all the acids that you need in the body. Let's find out what's happening to this rarely mentioned commodity in Nigeria. And we have joining us for that Ajibola Ayodeji, an analyst with Financial Derivatives Company, for this. Hi, Ajibola. Good afternoon and welcome to the program.
Good afternoon. Thanks for having me.
Interesting, we are discussing snail. This is not a very common conversation, but how popular is it in average homes in Nigeria?
Because it's popular because I believe while we're growing up, we catch snails in village and all. But nowadays we see that people are, at least as people are moving to the urban area, more people like the population from the rural area, we are seeing a decline. And snail is something that is common during rainy season, but when it comes to price now, even rainy season is not helping it now because the increase in demand is more compared to the supply that we are having now. So for a common man, it's like a luxury. Let me put it like that, like a luxury good to a common man. So it's common majorly amongst the high-end people, and the price, we are seeing the price increase. I think it has increased like 87% year on year between last year and this year. And why do we see the increase? Because of the increase in demand. Majorly is because of the increase in demand. I told you that while we were young in the village, you can still catch it, go out when rain fall and everything. But nowadays, people use it. They are now using it's more demanded for commercial purpose, for eating in restaurants, in eateries, and all. And also, it is used for cosmetic products and pharmaceutical products. So we are seeing the increase in demand for it without a corresponding supply, because we are not really commercialized in the farming of snail. Let me put it like that. So it's majorly subsistence. So that's why we are seeing the increase in demand. And also, although we are exporting, Nigeria is exporting. So even what we are producing is not able to meet the domestic demand, not to talk of export. So all these things contribute to the increase in price that we are seeing in the demand for snail. And I would like to tell you that even in the short to medium term, I don't think there is likely that the price will remain at this level or even increase more because there is increased demand for it. And if the supply is not met with the demand, we might still be seeing an increase in the price of snail.
Yeah, talking about supply, Jibola, I know that before now, sometimes if you're on some social media platforms, there's adverts on, oh, you can learn to produce snails and all of that, but I don't see those very often, at least these days. So even though Nigeria's production capacity is about 7 to 8 million kilograms, I wonder if there's any intentionality to build an industry around snail, because like you have said, it's not just about for eating. There's also the industrial use for it, and so that means that it has a lot of economic potentials.
Yes, it really has a lot of, like, snail is something that has potential. It has potential. We have seen it from countries that export it and they are gaining much from it. And the example of one of the country is Morocco. Morocco is an African country, is in Africa, but they are getting even much more from the export of snail. They produce more, they are the largest producer, and they are the largest exporter, exporting to continents like Europe, like Asia, and France is the major consumer when it comes to consumption of snail, followed by Spain, followed by Italy and another. So there's a potential for it. There's even a report by Future Market Impact Report. They said that the market for snail is going to be increasing year on year by 8.5% up to 2035. So there's a potential yearly to be increasing by 8.5. So there's a steady increase in the market for snail. So there's need for us to look into that aspect of farming because it has a lot of potential. And what Morocco, I would like us to do even what Morocco did, even much more. And one of the things they did was to engage in having like a cooperative, small cooperative. They organize like a body that controls it, that has to do with the collection of the snail, the quality control and export logistics. So they ensure that the steady supply of it through increased commercialization and quality assurance. So there's quality assurance, so they can export it to this market like Europe, Asia, because of the quality assurance. That's one. Another thing they did was government supporting them by bringing out policy that helps the snail farming. And what did they do? They engaged in training. There was this interview I had about a woman that although she started like that, she started snail farming in Nigeria, but she lost her investment because she didn't have a pure knowledge of it. She just went into it, but after that she increased her knowledge and she was able to scale through. So there's need to invest in training. There's need to invest in research. There's need to give finance to them, to farmers that want to go into that aspect of agriculture. There's need for finance, and there's need for export promotion. And lastly is the value addition. one thing that we lack in when it comes to agriculture in Nigeria is value addition. We don't process it. So if there's need, we can process it into frozen food, maybe ready to eat, can it, and all. This will also help in increasing that it will not only help the farmers but also help the country in gaining export earnings from it, because Morocco, even though they are exporting more, they also engage in value addition, which they get like 3 to 5% above what they could have gotten if they engage in only live snail export alone.
All right, Sajibola, thank you so much and for citing those examples of what other countries are doing about this seemingly overlooked potential around snails in Nigeria.
Yeah.
Thank you for sharing it with us. Ajibola Ayodeji is an analyst with Financial Derivatives Company.
Thanks for having me.
And just before we head to the markets now, Rwanda is looking for closer collaboration with Nigeria. Already they've signed an MOU with the Lagos Chamber of Commerce and Industry, and they say there's a lot of potentials in trading, manufacturing, and of course, tourism. The High Commission of the Republic of Rwanda has convened this meeting to share their progress with the target of fostering a closer relationship with Nigeria. They pride themselves as being one of Africa's fastest growing and most dynamic economies, achieving an average GDP growth of over 7% annually.
So inviting you to invest in Rwanda is not actually only about bringing money there. It's about bringing yourself, your families, communities, and bringing them together so that we build people who do know each other, people who can feel home wherever they are, and by moving one side and coming in the other one, what it does bring is actually strengthening relationship, strengthening partnership, strengthening Africanness.
For Nigerian investors, this means that Rwanda offers a partner regime that aligns closely with the ambitions in trade, manufacturing, value addition, and regional integration.
So much easier to invest in many African countries than to invest in your own country. In terms of the paperwork and all the hassle you have to go through. But I think it's good for Africa. As we speak, Nigeria, on every year, this is a statistic some of us take for granted or do not know. Every year in the last 5 to 10 years, Nigeria is either the second or the first largest investor in Ghana. Ghana have the statistics. Ask them. Nigeria, every year when they come out with the foreign investor statistics, Nigeria is either the first or second. Nigeria is always competing with China every year.
The relationship is sealed with the signing of a memorandum of understanding between LCCI and Private Sector Federation of Rwanda to underscore a mutual commitment to building strong and sustainable business links. And a taste of the Rwandan culture ends the meeting. All right, let's welcome Rwanda, and Rwanda will welcome Nigeria. Let's see what the market is looking like. Well, earlier today during Business Morning with Mr. Ruwani, I did have that conversation on the capital gains tax, and he agrees with a lot of traders that even though the capital gains tax is not the only driver of the profit taking going on in the market, but it's also a major one because a lot of the big investors, they will want to take their gains out before January 2026. And we are hoping that there'll be a change of heart or a reduction at least in the capital gains tax. So we have our market booming again because look at the NGX. The NGX opened this morning or closed yesterday, 148,000 level. Now we've lost, this is intraday, we don't know what's going to happen at the close of trade. We've lost a whole lot of money there. So it's at 146,929.80 for the NGX. The JSE is booming more than 0.5% in the green, 111,405. For Egypt, it's also positive, 0.41% at intraday. Kenya closed negative yesterday, 0.8%. at 190.54. In the Middle East, is mixed. We see Dubai positive at 0.76%. Abu Dhabi is also positive, 0.11%. Saudi Arabia positive, as well as Qatar, all positive markets in the Middle East. In the United States, near flatline, we know that the government shutdown that is expected to end. I believe the lawmakers from the House are promising like tomorrow, which is Wednesday. Hopefully we'll see that happen. So I guess we should expect a green market from the Dow Jones to the S&P, as well as the NASDAQ. NASDAQ seems to be the highest gainer, right? More than 2%. And NVIDIA is one of the major drivers of that. It jumped 5.8% on Monday, contributing more than a quarter of the S&P's total upside. Major indexes, they rallied across the board with the hope of that, reopening of a government shutdown that has been on for weeks now. And then we move to Asia and see a mixture is what we see for China. Nikkei 0.14 in the red, Kospi positive, Hang Seng. We can expect a spillover of the positive sentiments in the U.S. also in this market, and I believe that's part of what we have seen. Let's go over to Europe now, what we have Lars to update us on what the market is looking like at this time. Hi Lars, good afternoon. What's the color of the market? Hey Lars, can you hear me? I think you should unmute.
I hope.
Yeah.
I don't know. Did they figure it out? Okay. Here we are. This is the technology today. You have the best technology, and then still.
Yeah.
Anyway, here we are, and the DAX is up indeed, Ini, but just barely so by about 0.1%. So I gotta say, after yesterday's very strong showing, based on the end of the shutdown in the US, today is very much a calmer day, and will seem to be grounded in the real world. And that's not a pretty world for investors, as we've said many times over the past few months, Ini. Lots of sideways trading. There is no conviction. There's fear of an AI bubble. And Germany's most important financial paper this morning came out with a survey, and they measure investor sentiment bordering on extremely bad. That's the mood in Frankfurt.
Bad. I think that's a new word. We'll put that in our dictionary also, Lars. But yesterday, we talked about, reducing the dependence on China. But I think from your findings, it looks like the EU may be finding that very difficult.
Yes, indeed. And we just got more news here in this struggle that the EU is on and has been on for a while to become more independent from China. And now those latest news, that's regarding the chip sector, one of two sectors, of course, where we have the EU especially dependent on China with the urgent and even desperate need to lower that dependency. The other sector, of course, is resources. We've often talked about that. But like I said, today we're talking about semiconductors. And here the EU had a clear goal to increase its global market share in production of chips to 20% by the year 2030. Now, that number had been agreed on in 2022 when the EU's market share stood at only 9.8%. And the plan to increase that number was pretty much a reaction to the COVID pandemic, when China had found itself unable for a while to deliver chips to other markets, partially as that country's port operations had been halted. Now, however, just 3 years after they came up with that 20% number, the EU Commission now came out with an estimate that the EU's market share in chip production by 2030 will likely be at around 11.7%. So that would obviously be far below what had been planned.
But why does it look like the EU is failing in this?
Well, it's a good question, Ini, because for once we can't really say that nothing has been done. And that is often a problem in the EU, that we have more talk than action. But in this particular case, there has actually been quite some action ever since the European Chips Act came out in 2022. Corporations have actually promised investment of around 80 billion euros in production plants in the EU. And they're standing to receive 13 billion euros in subsidies for it. There are competence centers, there's pilot projects. So things are happening, including ongoing construction on 2 chip plants in the city of Dresden, a little further south from where I am right now. Those would be then run by Germany's Infineon and by Taiwanese TSMC. Now, the reason why all this is not enough is simple, though. The rest of the world is amping up production too, including the US, Japan, and Taiwan. Also, of course, in an effort to gain ground over China. But then, of course, with everyone increasing production, it's very difficult to increase your market share.
Yeah, it is. Realities of the markets, Lars. Well, it's a story we'll keep watching and see how it develops. So thank you so much for giving us updates.
Absolutely. Thank you, Ini.
Right, let's go to the crypto space now, and we see it's a red one for Bitcoin. Seems stuck around the 104,000, but in 24 hours it's lost more than 1%, 1.24%. Ethereum is still struggling, really struggling, right at 2,557 BNB, Solana, Cardano, most of them in red today. Just a few of the olds and stable coins are able to escape. Stories making the rounds in that space is China's National Computer Virus Emergency Response Center. They've accused the United States government of seizing 127,000 bitcoins worth roughly $13 billion, originally stolen in a 2020 hack of the Libyan mining pool. According to CVERC, the hack was carried out by a state-level hacking organization, and the U.S. seizure may be part of a broader operation involving the same attackers. U.S. and China always on the opposite side, even when they try not to be. The other story is the Bank of England. They said they would dilute their proposed rules for stable coins amid a surge in the sector that's fueled by pro-crypto regulation passed earlier. We'll see that what that dilution looks like in a couple of months. Ethereum exchange supply hits a 1-year low, and we saw the price right there, 3,550. So that's it from the crypto space and for Business Incorporated today. Thank you so much for being a part of it. It's still heartbreaking, though, that our market, that's the Nigerian market, is still in the red, because I have to report it again tonight. Hopefully there could be a miracle, but I guess something really has to be done about the capital gains tax. So we see a reversal of it. I'm John McQuarrie. See you tonight during the stock market report.